Hey everyone, it's Rich Warner from Consumer Math and Personal Finance class. Glad you could be with me today. Today we're going to talk about taxes in the United States particularly. This is Chapter 12 from Personal Finance for Progressive Thinkers. The textbook is available on the class website, and the Kindle version is also available on Amazon.com. As you can imagine, people who live in developed countries these days pay a lot of taxes, and there are quite a few different kinds of taxes as well. Taxes, also known as revenues for governments, is the primary way that governments get money to function. Without revenues, governments would have no money at all, whether it be on the local level for towns, whether it be for state governments, or whether it be for the big federal governments and the centralized governments of the world today. This is in contrast to the private sector, where businesses and private enterprises have to generate earnings. Earnings through sales helps these businesses to thrive. In this chapter, we're going to be focusing on governments, and governments don't have to sell anything in order to survive. They just simply have to levy taxes in various forms. As mentioned, there are many different forms of taxes that we're subject to. In the United States of America, we pay income taxes on a federal, state, as well as local if you happen to live in a big city like New York or Los Angeles. So that would be 3 different levels of income taxes that are levied to individuals. Corporations and businesses also have to pay income tax. But as we'll see, the loopholes that are available to businesses are so widespread that companies and corporations are not the primary sources of revenue for the United States government. Before we get into the different forms of taxes that are levied to individuals primarily, as this being a course on personal finance, we're focusing on the individual as opposed to the companies or corporations. I'd like to begin our review of taxes by stating that there are basically 2 different kinds. There are progressive taxes and there are regressive taxes. Regressive taxes, like sales taxes, have the same percentage rate that are applied to a transaction. So when you go to the store in Connecticut and buy a non-food item, you're subject to a 6.35% state sales tax. That's regressive because it impacts poor people more heavily as a percentage of their annual income as opposed to someone who's very wealthy. As you can imagine, if you're Bill Gates, Warren Buffett, or Mark Zuckerberg, paying sales tax is a breeze because it's only a few pennies as far as they're concerned. But for someone who's struggling, that 6.35% in the state of Connecticut in this example is quite a significant deal. So that's the idea behind a regressive tax. Other forms of regressive tax include tolls, where they're driving over a bridge, or fees to use a particular highway. There are also excise taxes that are levied on such items as tobacco or alcohol, and even gasoline, that are designed by government to discourage the abuse of these items. Excise taxes on tobacco and alcohol is a way for government to discourage the use of these items. Now we also have progressive forms of taxation. All the income taxes, whether it be on the federal, state, or local levels in the United States, are based on marginal tax brackets. And that means that the more you make in terms of annual income, your gross income, the higher the income tax rate will be. So someone who's in a high tax bracket, say someone who makes $175,000 a year gross, will be paying closer to 30% of their income in the form of federal income tax. Contrast that with someone in a lower tax bracket. Let's say you're making $20,000 or $15,000. Well, that lower level of income is going to put you in a lower marginal tax bracket. Another form of progressive taxation are property taxes that are levied on the local level. So if you own your condominium or own your home, or let's say you own commercial real estate or farmland, well, you're going to be subject to the local mill rate, which is designed to calculate how much tax you pay per $1,000 value of the real estate that you own. So for someone who owns a mega mansion or real estate that's quite expensive, they'll be subject to a higher property tax. The exact amount that you pay in property taxes is a function of the town's mill rate, which is set to some number per $1,000 value, and the other variable for property tax is the actual assessed value of the real estate that you own. So if the assessed value of your mega mansion is $2 million, you can imagine that your tax bill is going to be upwards of $20,000, $30,000 a year, $40,000 a year, depending on the mill rate. Whereas someone who owns a $150,000 condominium is going to pay maybe $4,000 a year, $6,000 a year, depending again on the mill rate of the town. So in this sense, property tax is once again a progressive form of taxation, because the more precious the real estate, the higher the amount of tax you have to pay. People who are lower income or just above the poverty line may not even own any real estate. And if they do, it's probably not going to be a mega mansion. It's probably going to be a home that's closer to $100,000 in value. Another form of property tax in some states, there are actually about 20 states or so in the United States at the moment that charge a property tax on your vehicle. So if you happen to own a very expensive car, you can expect to pay a lot in property taxes on an annual basis, once again based on the assessed value of your car. So if you own a clunker, you won't pay nearly as much as someone who owns a Ferrari. Once again, the motor vehicle property tax is not levied in all states in the United States. Paying more for a higher assessed value of something that you own is a progressive notion. The wealthy will pay higher property taxes because they own more valuable real estate and probably more valuable cars. The notion of a progressive tax, once again, is that the wealthier get hit harder than the poor. If you look at a recent report generated by the Office of Management and Budget, which is kind of like the budget office of the federal government, you'll notice that most of the tax that the federal government gets is from individuals, not corporations and businesses. Individuals pay the U.S. federal government close to 50% of the revenues that it receives every year. This is in the form of federal income tax, the 1040 IRS form that all households who have earnings in America must fill out. Now, this bar chart also shows that the second biggest source of revenue for the U.S. federal government is FICA taxes, otherwise known as the payroll tax, which come out of your paycheck in the amount of about 6.7% per paycheck. Now, most of the 6.7% is used to help pay for your retirement savings for Social Security. You're actually stashing away a little bit over 5% every paycheck, and that's going towards your Social Security trust account at the U.S. Treasury Department. The other fragment of the 6.7% FICA tax that's deducted from your paycheck helps pay for your Medicare insurance, which you'll have access to once you hit the age of 65. So in this sense, the FICA tax or the payroll tax, which is used to fund your Social Security and Medicare health insurance accounts in Washington, is really not a tax. It's really a forced savings and insurance policy plan that belongs to you. It does not belong to the government. But since it is collected by the government, it's measured as another source of revenue for the U.S. federal government. And as you can see from this bar chart, it represents about 35% of the revenues received by the federal government in any given year. So if you add up the 48% in federal income tax on individuals, plus the 35% in the FICA tax or the payroll tax for your Social Security and Medicare, that adds up to about 85% of the revenue of the U.S. federal government. This is in stark contrast to the roughly 9% that is received from corporate income taxes. Now, you're probably wondering, how is it that some of these big market capitalization companies like Apple and Microsoft, Home Depot, General Electric and such, Exxon, how is it that they're providing less than 10% of the U.S. federal income tax revenues, whereas individuals are paying 5 times as much in the form of income taxes? There's something wrong here. And if you're like most progressive politicians these days, this is a hot issue on the campaign trail. Parenthetically, the reason why corporations pay so little in income tax to the U.S. government is primarily twofold. Number one, many of these multinationals have figured out ways to siphon money to situate their earnings generated in countries abroad so that they're subject to foreign accounting rules, which give them certain special advantages. The other reason has to do with the net operating loss deduction, or NOLD, accounting laws that enable corporations to write off and carry over losses that were generated in previous years. It's these tax loopholes that are the primary reasons why the U.S. federal government receives so little in federal income tax from these corporations. Once again, the topic or notion of taxing corporations more than what they're paying is a very hot political issue, especially in an upcoming election year like 2020. State income tax levels aren't really that high compared to the federal government. On the state level, the big revenue generator are sales taxes. Unlike European countries, for example, that pay a value-added tax, VAT, otherwise known as the VAT tax, VAT taxes are like sales taxes, but the difference is that in those European countries, the VAT tax is levied by the central government. In the United States, sales taxes are levied by the individual states. And as mentioned, sales taxes are the big income generator for state governments. Depending on the town that you live in, the big source of revenue are property taxes. And this is primarily on the value of your home. As far as state sales income taxes are concerned, here's a very interesting chart from the taxfoundation.org. As we can see from this sales tax heat map of the United States, we notice that the highest sales tax rates appear in states such as Arkansas, Tennessee, Alabama, and Louisiana. New York State and California are also high sales tax states. Generally speaking, the more populated a state is, the higher the sales taxes will be. This is because state governments have a heavy social welfare support program in place in heavily populated states. And so the money's got to come from somewhere. And so the sales tax rates tend to be much higher in the higher densely populated states of the Union. In a subsequent video, we're going to set up a spreadsheet which is going to show you how to calculate the sales tax in your state, because there's certain items that are taxable and there are certain items that are not subject to state sales tax. In another video, we're going to learn what the mill rate is in calculation of property taxes at the local level. At the end of Chapter 12 in Personal Finance for Progressive Thinkers, you'll find a table entitled The Overall Tax Burden for the Average American in 2020. Now, I created this table based on data from different sources that provide data about the average income level, the GDP per capita in the United States, the median income, which is slightly different from the GDP per capita number, and we'll use the median income for the average American gross income in the United States. Median basically means the middle term in a series of observations. It's not taking the average of all the observations across the country or dividing GDP, which is gross domestic product, by the per capita would be dividing it by the 328 million citizens of the United States. That's GDP per capita. Median income is actually what was the middle income level or the middle observation in that series of income data. That's the median income. That's a little bit more accurate for our purposes. So as you can see, the median income for 2020 in America is estimated to be about $66,538. Now, as you can see from this table, in the totals row, the total amount of taxes paid by the average American to federal, state, and or local governments is about $17,325 per year. And that includes state sales tax of $815, FICA tax, remember that's Social Security and Medicare, $4,458. Small taxes, that's like on tolls and alcohol, tobacco, if applicable, that amounts to $86 a year. State and local taxes, that includes property taxes and non-sales tax revenues for states, that amounted to $2,351 or $2,351. The average amount that's expected to be paid in federal income taxes in 2020 is slightly under $10,000 or $9,615. Now, as you can see, at the rightmost column that most of the tax burden is the federal income tax. That's almost 15% in total tax paid by the average American. Next, we have the FICA tax. Well, that's simply Social Security and Medicare. And I don't really count that as a tax because that's your money that you're going to tap during retirement in some form, whether it be in the form of Social Security entitlement checks or in the form of Medicare health insurance after the age of 65. So next we have the biggest burden would be state and local taxes, and that's essentially property taxes that you pay on your real estate. Property tax, once again, is the mill rate multiplied times the assessed value of the home that you own. State sales tax is the big variable. We saw that some states don't even charge state sales tax. So I had to do basically an average across all the states and multiply that times the amount that is paid. And state sales tax ends up being only about 1% of the overall tax burden for the average American. I think one of the interesting things about this table that stands out to me is the fact that Americans pay about 3 times as much in taxes to the federal government than to the state and local governments. That has always rubbed me the wrong way. I cannot understand why individuals pay 3 times as much to the federal government as opposed to state and local. Don't we live at the local level? Aren't most of our needs, I'm talking police, fire, road maintenance, infrastructure maintenance, education, schooling, healthcare, aren't these needs local? Aren't they more of a state or local notion? Why should we be spending the most to the federal government? At the highest level, we have the least amount of control politically over what the executive and Congress does with the money that we pay in. This is our tax money that's going to the federal government. Why are we giving all this money to the federal government? What are they doing with it? Are they helping with our schooling, with our firemen, our policemen, our security? Are they protecting us? Are they educating us and providing health care for us? Medicare only kicks in after the age of 65. What do you do if you're 25 or 30? Or what if you have a family before you're retired? You have to pay for health insurance yourself. What good is the money that we pay to the federal government? Are they using it for weapons and jets and planes? What are they using the money for? Foreign government aid? Isn't the need in this country at the moment starkly at the local level? We have homeless people on the streets. We have people in need of health care, education, kindercare, preschool, teachers. Teachers are severely underpaid in the United States of America. This is our money, and it should be applied and directed at the state and local level, not on the federal level. I hope that individuals begin to understand that the tax system is actually inverted in this country, where the greatest need is on the state and local level. And the money that we pay in taxes is not going to the state and local level where it's most needed. It's going to the federal government, where who the heck knows what that money's being used for. This is a serious issue that must be addressed by Americans and representatives today. Because as it stands at the moment, we do not have a representative system in place. This is anything but what the average American deserves. This is our money. We should dictate what it's being spent on. It is through our money that these guys in Washington can run around with their fancy cars and their high salaries and their lobby money and PAC money, where they can do what they want with our money. That's not going to happen much longer, I guarantee you, through the political system. I am extremely concerned about this issue and about the lack of representation and the misallocation of funds through the tax system in this country. These 2 charts that I have in Chapter 12 of Personal Finance for Progressive Thinkers shows how the income distribution has been concentrating towards the wealthy at the expense of the middle class and poor. Most starkly, between 1980 and 2015, income has increased among the top 10% earners in this country by 242%, which is a growth rate that is over 5 times as much as what the middle 60%, i.e. middle class, has experienced. This pie chart shows the distribution of wealth in 2016. I'm sure a few years on, it's even more lopsided. This pie chart shows that the top 10% own 80% of the wealth in America. If that's not a concentration of wealth and power, I don't know what is. The World Bank uses something called a Gini coefficient to measure the distribution of wealth among different income strata of a country. Now, the Gini coefficient ranges between the number 0 and 100%, or 1.0, and a Gini coefficient of 0, or 0%, represents perfect wealth distribution across the citizens of a country. And the closer the Gini coefficient gets to 100%, or 1.0, the more uneven or unequal the distribution of wealth is in that country. Back in the 1950s and 60s, the middle class in the United States was predominant, and the Gini coefficient was closer to like 32, 33. Well, we've come a long way, baby, since the 1960s. In the current millennium, the Gini coefficient for the United States is around 45, 46. And a Gini coefficient of 46.5%, which is currently what it is in the United States, puts the United States on a wealth distribution level on par with countries such as El Salvador, Mexico, Brazil, and China, which shows just how unequal the United States wealth distribution has become. The most shockingly uneven distribution of wealth occurs in sub-Saharan Africa and Southern Africa. The South African countries particularly have some of the most unequal distributions of wealth there is imaginable. In contrast, the Northern European economies, most notably the Nordic countries for some reason, have Gini coefficients that are as low as 25%, 30%. Western European countries with social democratic forms of government are closer to 30, 31% Gini coefficients. And our big neighbor to the north, Canada, has a very respectable Gini coefficient of about 32%. Maybe we can learn some things about how to run a country from Canada and from these Northern European and Western European countries that have much lower Gini coefficients, more respectable, evenly distributed wealth than we do. Now, there are many reasons as to why the distribution of wealth in America has deteriorated. And yes, you can make the argument that, technology has had an impact because it's taken away jobs from laborers, etc. And it's made some of these technology whizzes extremely rich, like the Zuckerbergs and the Bill Gateses, etc., and Silicon Valley investors, for example. And yes, there's a lot of wealth has been created in the stock market, which, by the way, it's the wealthy people who have their funds invested in the stock market. Poor people do not have IRA accounts. Even though the data is somewhat improved, it's still nothing like the amount of money that's invested by wealthy individuals. So the lower middle class and poor people hardly participated in the recent bull rallies that we've seen in the stock market. The primary reason as to why the Gini coefficient has deteriorated in this country to levels on a par with El Salvador, Mexico, Brazil, and China is essentially due to tax policy. And this development has really kicked in since the 1980s, ever since President Reagan ratcheted down income taxes for the wealthy and protected estate transfer for the rich, lowering taxes on capital gains and dividends, for example, lowering tax rates across the board, lowering the marginal tax rates charged on income tax at the highest level, for example. We haven't seen these low tax rates since the early 1900s, when the income tax system wasn't even created yet. And it's this lowering tax rates which has benefited the rich at the expense of the middle class and the poor. Other studies have been done by economists and sociologists that compare the level of productivity and happiness, longevity across countries, and they've shown that the United States lifestyle index, if you will, or happiness index, has been deteriorating since the 1980s. Meanwhile, countries that have social democratic systems like the Nordic countries happen to have the highest happiness ratings and productivity ratings and health ratings in the world. The United States is in 18th place. Americans don't live nearly as long as people in other countries like these Nordic countries. Indeed, as of 2018, Life expectancy in the United States for the average American was 78.7 years. That's about 1.5 to 2 years shorter than the average OECD, i.e. developed country, putting the United States in 31st place among OECD country as far as life expectancy is concerned. The key components that go into the happiness index, by the way, happen to be income levels, GDP per capita, life expectancy, social support in the form of health care, education, and a retirement pension, freedom of choice and the political stability of the country, generosity levels, giving to charities, for example, and perceptions of corruption of the government. So it's no surprise that countries that are perceived to have the most corrupt officials in government at the highest levels tend to have the lowest happiness levels. You know, the pinnacle of capitalism probably occurred in 1989 when the Berlin Wall, finally fell and Germany was reunited. That event basically pointed out just how miserable the communist system was and the terrible injustice that the East Germans suffered while the West Germans prospered. I mean, the income disparity between East and West Germany before the wall came down was significant. And I happen to speak from personal experience on this because my dad's side happens to be from East Germany, and my grandfather escaped to the West and eventually emigrated with his family to New York after World War II, leaving behind some of his relatives who remained in the eastern sector. And before the wall came down, I went to visit some of my grandfather's relatives from the East. And I can't tell you the disparity in happiness and wealth and attitude that I noticed among the people from the East before the wall came down and the West. It literally was like going from a color movie in the West to a black and white movie in the East. On all levels. It was really quite sad and startling to me. I was about 14 years old at the time. So I am a first-generation American born in New York. My mother is from South America, and she fled the communist government when Salvador Allende came to power. And she also explained just how miserable the conditions were under a communist regime. So the message from my mom's experience in Chile and my grandparents' experience in East Germany is clear. Communism is a failure. The communist system does not work. So many people have died. Health conditions were so poor. Food was so scarce in these countries during these communist regimes that it is no surprise that in 1989, the Berlin Wall crumbled. So due to my parents' personal experience directly with communism and witnessing the fall of the Warsaw Pact and the Eastern Bloc into the 1990s, the message is clear. Communism is a failure. And anyone who tries to convince you otherwise is lying to you. That much is clear. But I have also seen and experienced firsthand just how miserable people live in the United States of America. We have homeless people on the streets. We have some of the highest use of opioids in the world. We have the highest healthcare costs in the world. Old people are forced to sell their homes and wipe out all their assets so that they could qualify for Medicaid assistance in the hopes of paying for operations that they desperately need. This is not a successful form of capitalism in America. What we should look to is the example of the Nordic countries and the Western Europeans who have social democratic programs in place. They actually take care of their people in these countries. They work hard and they play hard. They have families and they're happy. Now, before somebody tries to poo-poo me and say that I'm not aware of what's really going on in America, that's not true. Having had a very happy childhood as an upper middle class family, qualifying to go to a top public high school in New York City, I went to one of the best high schools in the country. You had to take an entrance exam in elementary school to qualify. And I was fortunate enough to qualify for one of the best public high schools in America. Then I went on to get a BA in political science from the highest ranked liberal arts college in America. After that, I got a finance and international economics degree, and then shortly thereafter, I got a graduate degree in education. I've traveled across the United States extensively. Every day I read articles. I follow economic articles in journals on the condition of the U.S. economy especially, and I can't tell you how concerned I am right now about the state that we're in, both politically and economically. It is a great concern to many people who work hard in this country. So to sum up this whole topic of taxes in America and comparative tax systems across the developed countries particularly, I'd like to just say in closing that there's got to be something better than the extremes. Communism obviously has failed, but unrestrained capitalism is also failing America. There has to be something closer to the capitalist system that incorporates some of the socialist principles that we can apply to help get this country back on its feet. You know, I happen to be a referee of the game of soccer. I grew up being a passionate fan of the sport. Not only have I played the game competitively, but I've coached the sport and I've officiated the sport as a referee for over 25 years. One of the big lessons or analogies that I like to leave you with is that capitalism is like a game of soccer or basketball, if you will. Now, if you don't have officials in the game of basketball or soccer, what do you have? You have the state of nature. You have the potential for a match getting out of hand. You have the potential for serious fights and people getting hurt and fans getting involved and getting hurt as well. Coaches, spectators, players. The state of nature is no way to run a game. The game of capitalism must be officiated, just like in the game of soccer and basketball, with officials that can say, you can't do this. We need to regulate how much you can charge somebody for that cancer drug or for that influenza drug. We need to regulate the price of energy so that we don't get what happened to Californians by Enron and company. If you might recall, Enron was a company that abused its power and literally shut off power to Californians, costing them billions of dollars. Enron essentially caused power shortages to jack the price of electricity to its customers. It took a congressional body to actually step in and say, you can't do that. The Glass-Steagall Act, separation of commercial banking from investment banking, and all the accounting standards that were readjusted after the financial crisis of 2008, where investment banks went bonkers with leverage. There was uncontrolled leverage. I mean, if you open up a commodities trading account, there are limits to how much margin you can use, how much borrowed money you can use. Without those regulations, you would destroy the world financial system, because leverage is a double-edged sword. It can lead to financial catastrophe potentially, given certain black swan events as we've experienced. In contrast with Milton Friedman particularly, who wrote the books Free to Choose and a classic book in the 60s, which basically was in praise of letting capitalism go because market participants understood best how to run their lives in the world economy. Mr. Friedman, you're wrong. As Thomas Piketty points out in his recent classic about capitalism, unrestrained capitalism leads to over-concentrations of wealth in the hands of the few at the expense of the masses. What's the inevitable result there? But the French Revolution reenacted. It is actually in the best interest of some of the most powerful capitalists today to have regulations in place, because you need the rules of the game in place. If you don't have the referees, the game goes bonkers. You will have fights. You will have revolutions. That's just the state of nature. So it's our choice. We can work together, the rich, the middle class, and the poor, or we can end up becoming polarized, as this nation happens to be politically. We essentially have polarized Democrats and Republicans in Washington, and they can't compromise about hardly anything. And this political polarization is simply another manifestation of the economic disparities in this country, the unequal distribution of wealth. So no, I am not an extremist. I am not a communist socialist. I am a capitalist socialist. I believe that the Nordic countries and Canada got it right. We can learn so much from their example. So that's all I have to say for this very, very tense subject of taxation. And I will just leave you with one essential question. What do you think? What do you think about the tax system in the United States? And can we make this country better? Thanks so much for watching. This is Rich Warner from Personal Finance for Progressive Thinkers. Have a great day.